All right. Okay. Welcome everyone, welcome. I know it's an early stream, but I decided to do a stream here for tonight. Hopefully people receive the notifications that I am live. Let's see. Okay, I think in another few seconds here, in the next 30 seconds, we'll begin the stream. Okay, I think things are running smoothly here, hopefully. Let me know, guys, in the chat if everything is good. Please let me know. Hey, Lovey, what's up? Hello. Sorry, I didn't see your message there. You said... is that an okay? Okay sign? Hey, 5 likes. Awesome. Okay. Yeah, let's wait a couple more seconds here until we begin. Okay, I think we're good. All right, everything's set up perfectly. All right, how's everyone doing on this fine evening? Oh, let me bring down the audio here a little bit, the music. Just bring my mic a little bit closer. Hopefully everyone can hear me perfectly fine. The mic isn't too close to my mouth, so it shouldn't be cracking the audio with my voice. Dun. Alright, so as stated in the title, in the description box down below as well, plus the thumbnail for this video, we're going to be talking about kind of the future of this overall global and specifically the US economy, since the US economy basically is the major leader of the world. And how its potential economic doom can actually affect certain sectors of the market and just overall society. I know it sounds very apocalyptic there. It sounds very pessimistic, sounds very bad, but humans will always prevail. But when it comes to economic contractions, depressions, economic dooms, whatever you want to call it. But I just wanted to specifically talk about this because it directly involves one of our most recent and newest long-term investment positions. Okay, but before we begin that, let's go over the markets. Okay, so today we had that massive rally to the upside due to the Iran uncertainty basically subsiding. However, there's still a lot more work to be done since, again, it's only a 2-week potential ceasefire, but again, Iran has been saying that US and Israel has basically not upheld the ceasefire so far, as Israel has begun to launch attacks in Lebanon, more attacks actually in Lebanon, and also surrounding Middle East countries. So it seems like there has to be a total ceasefire for the entire Middle East to kind of lower its weapons, for every country to lower their weapons and counter missiles and whatever it may be there, right? And just overall increase certainty in the Middle East region. Does that make sense? Right? So the markets have reacted off of that, and we rallied almost 3%, right? Over 2% here, right? 2.55% to close the day. So I'm gonna give you guys a little bit of a pretty quick insight as to what I expect to happen for the markets for the rest of this week. So obviously, first of all, today really good pivot into the end of the day. I mean, the market held up really well. The market breadth was absolutely amazing, very, very strong across every single sector. We've seen multiple rallies and multiple holds of those respective gap ups. Even though individual names and individual tickers may have filled in their own gap up areas, but the overall sectors and overall market breadth was extremely good and strong into the end of today. So what does that tell us today for the rest of the week? Well, there's still going to be a little bit more profit taking and most likely just sideways action. So a lot of people are going to be expecting immediate moves lower, maybe if uncertainty arises again in the Middle East. But again, this 2-week ceasefire thing is obviously we're really not holding Trump to hold that his word for a 2-week ceasefire. But again, just from a technical perspective, if we were to take out all the noise, it would be absolutely pertinent for buyers to hold the 670 level here, right? This is the line in the sand level for us now. Right, this is a major line in the sand level. We have to hold this level because that means we can actually allow the daily 200 SMA to start catching up to the price as well. And again, I've noted in the previous streams that the daily 200 SMA has been oddly curling up higher. And I told you guys that I think it was last week. Yeah, in last week's CFO Stream Watch report, when we were looking for that oversold bounce, I also noted that this daily 200 SMA is looking a little bit suspicious here, because if you were to continue to move down and if we were to see an oversold bounce, an overextended oversold bounce, then we would be seeing the daily 200 SMA flattening out and starting to curl downward. But the opposite was happening. Instead, we were starting to see the daily 200 SMA flattening out and curling up higher. That's what we saw last week before we had that massive jump up higher on Tuesday. And obviously we got that oversold bounce that we were talking about last week or last Sunday in the report. So, and again, if anyone is new here, if you guys are wondering what this report is, just check out the description box down below. And check out the second link where it says the CFO Spring Watch report, and all your answers should be hopefully answered there in that website once you click on that link. Okay, but yeah, it would be really nice if you guys can join us, and I'm sure it'll be a very, very good return once you join the report, because I know you guys will learn a lot through the report, and you guys will most definitely get some amazing ideas just in the report alone, okay, and not just off of these streams alone. Okay, you guys will get further top-down analysis and trade ideas, actionable trade ideas, and etc. Okay, so let's get back to the markets here. So the reason why I'm saying 670 is a huge critical level is that, well, if you guys haven't noticed, we're right back to our 4 major levels of the market, right? So 694, 686, 675.50, 670, right? These are the 4 key levels where the markets have essentially moved sideways for about 5.5 months. Okay, since November of last year, right? 1, 2, 3, 4, 5, right? All the way up into around mid-March when we broke below 670 officially. So this is clearly a huge range from 670 to 694 that we have to uphold if you were, well, not if you were, but if you are to see a new all-time high, or at the very least a retest of the previous highs here, right? That includes the all-time high price print that still sits at 697.84. Is all of this making sense so far? Okay, I see you guys' reactions there. Awesome. Okay, so that is the main reason why I want everyone to focus on the 4 levels once more, and the fact that 670 has to be a huge line in the sand level. Buyers have to hold this level, because if it breaks below 670 and sellers come right back in, then we're going to be expecting a new lower high to form, and we're most likely headed back down to the previous lows that we've revisited here, right? 646.50, 654.50, maybe even 633, right? So please have these 4 levels on your SPY charts. I mean, I don't know why you wouldn't have it, since I've been talking about it for the last 5.5 months. Okay, so make sure you guys have these levels on your SPY charts if you guys don't have them yet. Okay. Okay, so with that being said, okay, for the rest of this week, again, we just have to hold 670. If you do retest it, fine. We have to retest it and then pivot away from it. That's it. Okay, we cannot break below and close below it for the rest of this week. That's not a good sign. I would much rather want to see sideways action where we form a very nice tight bull flag, potentially a Momo bull flag, right? A momentum filled bull flag, and then essentially heading up higher and sliding up higher with lower volume. Okay, now what's also interesting is that the price was able to close over all of my major SMAs. This massive move up will allow the daily 10 SMA to eventually have a nice bullish crossover on my daily 21 SMA, giving us a very nice short-term signal that, hey, we should be staying at these current highs now, and potentially in the future we can continue to break out to higher highs and higher lows, right? So again, today is a very, very nice signal that that we are heading in the right direction for a longer term sustained uptrend, right? But again, one day is still not a trend, unfortunately. So we have to see how the buyers and sellers decide to settle out around these levels, right? Specifically the 670 to 675.50 area. Does that make sense? Okay, I think I see your guys' reactions. I think I just saw it. Okay, so I think if anyone is having trouble reading the markets, right? Well, first of all, these are massive moves, right? Try not to focus so much on every single tick, right? Every single cent. Just focus on how the price is going to react off of our major levels here, right? So 670, 675.50, 686, and 694. If we were to continue that sustained uptrend that I just talked about when I told you guys about the potential for this daily bullish crossover to occur between the 10 and the 21 SMAs. Okay, so now again, really good close, very bullish close. We are above all of my major SMAs again. There's a good chance that we'll be seeing the price consolidating around the daily 50 SMA, which will continue to move downward, right? Because again, it has to move downward and eventually flatten out and start to curl back up higher, and that will only happen if and only if we are seeing a sustained uptrend. All right, so ideally we see the daily 50 SMA continuously moving lower and eventually moving away from the price, and again the price should be moving up higher, or at least moving sideways, and eventually flatten out and then curl back up higher as the price breaks higher as well. Okay, so again, there's a lot of ways to do predictive technical analysis based on my SMAs alone. All right, SMAs are very, very important because again, institutions and big money traders and big, well, not just big, but Wall Street themselves tend to use major SMAs like the 200 and the 50 SMAs, right? I mean, I've talked about this extensively ever since Trust Focus 1 was born. Okay, ever since this channel was born, ever since my Instagram page came up as well. So it's very critical that you guys use major moving averages. But again, if you don't want to use it, that's fine, right? Simple moving averages that I use, SMAs, are still lagging behind the price, but again, they provide some very good resistance and support as SMAs. Okay, if you guys are thinking about the short term, but in longer term perspectives, they also provide some very good signals for major areas of long-term support or major areas of long-term resistance. Does that make sense? Okay, so lastly, for the market summary here and what I expect to see from the markets, let's take a look at the VIX. Okay, so the VIX absolutely obviously crashed lower, but surprisingly ended up at as a doji candlestick here, and also it was able to hold this value of 20. And what have I been telling everyone since late last year when I was telling you guys how to prepare for this new fiscal year? Well, I said to keep a very keen eye on the VIX. It's essential that you guys keep your eyes on the VIX, right? Because it's going to have an affinity, a magnetic new personality towards this value of 20. And so far this entire year, we've been seeing that, right? This entire year, we've been, first of all, since this year began, we've continued to climb towards this value of 20. And then once we hit that value of 20, we continue to stay around the value of 20. And once that occurred, we actually saw huge pops in volatility that brought us towards the past the value of 30, which in that case is going to keep us in this big range from 20 to 30, which has also occurred and still occurring now. Does that make sense? Right. So everything that I've told you guys in preparation for this year has occurred so far into this new quarter of quarter 2. So again, I'm not telling you guys to always listen to me, but you know, my technical analysis tends to be very good at potential predictions because my analysis tends to be on point. So again, I'm not trying to flatter myself here, but hey, I gotta give credit where credit's due. All right. When it comes to overall market analysis, overall macro analysis, I tend to be correct. Like for example, when I told everyone about the warnings that I've had that I wanted to give out to everyone about Donald Trump once the election results came in November of 2024, I gave everyone the potential for him to ruin the economy with tariffs and whatever else and wars, right? And everything has happened so far, right? And so again, I'm not trying to toot my own horn, but you know, when you do technical analysis for 8+ years now, things start to click in your head, right? So almost a decade of me doing technical analysis, and I have a lot more experience. I have a lot more experience waiting for me in the markets too. So you know, that's how you stay humble, right? The market always teaches you something new about yourself and about how the markets work. So you know, with that being said, okay, I think it's critical that you guys understand where VIX can stay for the rest of this year. Again, I really wouldn't be surprised if VIX continues to stay, you know, at the very least around 20, even if we decide to move up higher, because again, that little bit of uncertainty will remain as long as Donald Trump is in this office, right? In the presidency, right? So I thank you, Nidon. Thank you with the goat signs always. So or the goat emojis. So you know, I really think that when it comes to the overall VIX, again, please watch out for the 20 value here, because I think there's a good chance that we can even follow the market of 2022. Right, we can definitely start to see potential signals and signs of a 2022 market if we continue to see VIX elevated above this value of 20. Does that make sense? Okay. Okay. I'll drink some water. Okay, let me there we go. Okay, I want to give one more notification to my private CFO Discord members. Okay, so that's it for the market summary for tonight. Hopefully that was a very insightful and applicable market summary, especially for the longer term. But now let's talk about a particular sector that everyone should have their eyes on, other than, like, you know, utilities or industrial that I've been talking about since last year, actually, since quarter 3 of last year. So we're going to take a look at XLP, or consumer staples. Okay, so consumer staples had a massive move up today. Okay, obviously the overall market and overall market breadth was absolutely amazing, which is why a sector like this one, which tends to be usually a defensive sector, actually rose up higher. But I have a thesis, a fundamental thesis here, that XLP didn't rise just because the fact that the overall market breadth was great. Okay, and the reason being is, well, not the reason being, but the overall thesis basically is that as the overall economy continues to see the negative implications rising from Trump's actions, his words, his policies internationally and domestically, it's going to absolutely wreck the U.S. economy. All right, we've seen what has occurred from his first term. Right, I talked extensively, by the way, about his first term tariffs post elections in November of 2024. I have to go back and find my CFS Ringwatch report there, but I wrote extensively about that and the potential impacts and the current impacts that we're still seeing and reeling from his tariff tantrum that he had in his first term. Now, the fact that we've had an even more and crazier tariff tantrum this year, in 2025, last year, I'm pretty sure we're going to be seeing some absolutely crazy negative ramifications from his actions. And again, Demented Don here is definitely not someone that we want to have as president for long. So again, there's whispers of articles of impeachment being drafted up right now amongst Congress members. But then again, if he's impeached, well, the next in line will be JD Vance, our unfortunate vice president, which is, again, not a good idea either. So he's also kind of moronic and idiotic. So it's gonna be crazy. But anyways, this entire administration, as long as they're in power, without any type of balance of power in the legislative branch, it's gonna take a toll, and it's definitely gonna hurt the overall economy. So this all, what I've just told you guys there, right? This is not from a political perspective, guys, because this is exactly what, this is a great example of the fact that politics does influence the overall markets and the overall economy, right? The actual public policies, right? The political policies that a potential administration can put forth is going to matter, right? In society. And so this is the reason why I'm talking about it, right? Because it's going to tie in with consumer staples, right? So if the overall economy is turning to shit, right? And it will, it definitely will, right? If you guys are completely disagreeing with me still now about what's happening now with this country, with how the current administration is running, even after I told you guys and gave you guys all that data, that objective data and statistics that I've given you guys in 2024, right? So right after Trump got elected, if you guys are still disagreeing with me on that, even with the objective data and stats, well, I don't know what to tell you. All right, you guys are definitely just going to be arguing with the wall, because it's the reality, right? It's truth, right? It's the facts of the reality of the situation that we are in now. And so that ties in with the fact that the overall economy will be seeing huge strains in 2027, right? I've given you guys a hint on, I think it was on Monday, right? On Monday, when I gave you guys a timeline where somewhere around mid-2026, we're going to be seeing some fears of economic contraction, and then that will subside. But then around 2027, early 2027, we're going to be seeing the actual effects of the of this current administration's actions in the overall economy. Okay, I posted this on my, I did post this on my Instagram story, I think a couple days ago, or I think on Monday or Sunday night. Again, I will give my CFS Ringwatch report readers exactly the timeline that I have in mind already. I'm just doing a little bit more further in analyzation to kind of give you guys a better accuracy to my potential prediction as to what can occur in early 2027. But anyways, again, this potential prediction is not about the markets, but it's solely going to be about the economy, okay? So if you guys really want to read what I have to say on that, which is going to be based on, again, objective facts and statistics. Again, let me say it again. Objective facts and statistics, like I've written in 2024 in my CFS Ringwatch reports, okay? I think you guys will very much should be willing to listen to what I have to say, because I've been correct so far since 2024 about this current administration and the effect that they're going to have on this economy and the current effects that we're seeing now with the economy, right? So, when it comes to, now let's all bring this back around to the consumer staples sector. So this is a very essential, it's a needs type of sector, not a want, right? Consumer staples is what humans, us in society, spend our money on, and that is food, right? Food. All right, this is the most important part about being a human being living on this planet that we like to call Earth, right? So consumer staples, the reason why, again, I think it went up a lot today, right? It's not just because of the fact that we had a very good market today and very good market breadth, but because of the fact that people are starting to realize that once this uncertainty dies down in the Middle East, we're going to start to focus more on the labor market and the inflation that we'll be seeing, okay, off of these consistent oil supply shocks that I've talked about multiple times so far, and the complete derailment of the high prices of gold and silver. That's a little hint there, guys. So gold and silver should be seeing massive moves to the downside very, very soon, okay? This is not a hyperbole, okay? I really think that everything that I just told you guys so far will accumulate and amalgamate into one single thesis that I will have for you guys by the end of this year on the overall economy and into early 2027. So again, if you guys want to read that, make sure you guys become a reader of the CFO String of Watch report today. Okay, so with that being said about XLP, right? XLP, consumer staples, this is what people need, right? This is what people need to survive as a human being. And food will become very, very important. And as food prices continue to go up, as we've seen so far, especially as oil has gone up and has sustained its highs, its current highs, groceries will continue to rise. All right, and that is very unfortunate for majority of Americans, right? And the U.S. economy will continue to spiral downward and contract, and eventually into that convergence point that I will talk about into the end of this year and into 2027. Again, make sure you guys become a reader. That'll be the last time I'll say it tonight. All right, that's the last time that I'll say that tonight, but please look at the description box down below and join us and become a reader of the CFO String Watch report, because I think that there is a lot of value that you guys can get from it just based on the overall macro analysis that I always provide on a weekly basis. Okay, so when it comes to consumer staples, I want to talk about our new investment, okay? Our new long-term investment that hey, what's up, guys? Make sure you guys hit that like button down below, as always. What's up? Okay, so our newest investment, our newest and most recent long-term investment position is ticker symbol GO, right? Grocery Outlet Holding Corp. Now, if you guys don't know what this is, well, grocery outlet is a market where they actually are able to provide some very, very cheap groceries. All right, they provide cheap groceries, and the way that they're able to do that is that, well, they collect items that are nearly at their expiration date, or at least best by date. And what's amazing is that, if you guys didn't know, expiration dates and best by dates are very, very different. And even if there is an expiration date, usually that's usually just means that that it's not going to become moldy. Obviously, that's prevalent on the type of food that you're looking at, right, or type of grocery that you're looking at. But the expiration date usually just means that it's probably be a good time by that date that you guys eat it, right, for it to retain its most freshness, or maybe even just the overall taste of the food, right? That's what I was taught, but that's kind of what it means, right? Expiration dates and best by dates. Okay, so Grocery Outlet is a company that focuses on providing very, very cheap groceries. Now, you guys should be starting to turn some of the ideas in your heads as to the reasons why we got into this position, right? Based on what I've just said, everything that preceded what I've just said now about Grocery Outlet. Because if groceries are going to become even more expensive, what will consumers do? What will all of us do, right? Especially for everyone who's living in the US, right? We're going to be focusing on getting good groceries from cheaper places. Very, very simple thesis, right? And sometimes that's all you need, right? Stanley Druckenmiller loves to look at things from a surface perspective, right? From a macro perspective, and then get into a stock position and then do a deep dive analysis after he's already in the position, right? So that's exactly what we're trying to do here with Grocery Outlet Holding Corporation. All right, so this is, again, a market where they provide cheap groceries. And just like I've said, if an economy is going to contract, right, the one thing that people need, not a want, right, is going to be food, right? I mean, it's very obvious, right? They need food. We all need food. Consumers need food. And as the years go by, in the next 2 to 3 years, okay, as the economy worsens day by day, right, month by month, year by year, people's monies are going to be focused on buying groceries, okay? And it's not going to be focusing on, you know, how expensive a certain food is, or you know, people are not going to be focusing on going out to eat at restaurants. They're going to be focusing on trying to stay at home and save as much money as possible. And while staying at home, they will want to focus on groceries and eating at home, right? So if grocery prices continue to stay at highs and continue to grow this year, I think Grocery Outlet will definitely be a name to be focusing on. Now, let's go into more of the recent news on Grocery Outlet, on Go, right? So we are Go on Go. Okay, so my personal average entry point for GO currently stands at $6.98, so right underneath $7. Okay, so I am still holding a pretty small amount of shares. I only have 1,000 shares in Go. Excuse me, not 1,000. I still only have 500 shares in Go. I'm trying to reach 1,000 shares, but I need to see a little bit more, just a bit more conviction on my part, from a fundamental perspective and a technical perspective, to add on to my position. But either way, my average cost is at $6.98. Okay, so that's perfectly fine. Okay, now when it comes to the technicals here, all right, I want to let you guys know that Grocery Outlet has received some pretty good insider buys, and recently the company has expanded their board members with new directors as well too. So usually indicates that maybe these new directors might also have more. Well, they might initiate an insider buy transaction, because again, why wouldn't you? If you're working for the company and you know, you're trying to make the company a better company, you might want to also show that in the financial perspective by buying the company shares, right? So again, overall, there was I think almost 2 million shares that are bought from insiders total in the last couple weeks here in the month of March as well, right? So once it hit lows here, right, around $6, I think there's a bunch of directors that bought shares here. Okay, so that's interesting, right? As the stock hits new all-time lows. So there's been a huge market re-rate for GO. And it's interesting because the company is starting to again expand their board members, and usually when that happens, they're looking to basically reinvigorate the business operation and just the overall company, and that could go wrong. But that's obviously, it should be a pretty good sign, a pretty, at the very least, short-term to mid-term bullish indication, especially when that type of action from the company is backed up by insider buys that are again, this insider buys totaled about 2 million shares. So that's pretty good, I would say, and that's a pretty good overall signal that, hey, maybe this company is trying to turn around here. So again, from a technical perspective, absolutely ugly, but this overall move down definitely signals that, hey, we might be seeing, oh, well, there you go, look at that. Grocery Outlet appoints Francis L. Allen and Felicia D. Thornton to board, right? So, you know, with the market cap now below 1 billion, right? They're at a little over 1 billion around here. I think around right here. I think when they're, yeah. So now it's back down to 696 million, right? So they're a small cap company now. So maybe, just maybe, with these new board members, and you know, maybe they're trying to again reinvigorate the company and just take it to the next steps, right? As maybe they're also seeing that people are starting to focus more on not eating out and more on buying food, right? Buying just groceries, but cheaper, more available and cheaper groceries. They might head towards Grocery Outlet, right? So And hey, if I can find cheaper groceries myself, I might just go to our grocery outlet or even Aldi, right? If you guys don't know, Aldi kind of use the same standards to sell groceries, right? If you guys don't know Aldi, look them up. They're a pretty good store. They have some pretty good prices, right? So Aldi and grocery outlet, they kind of have the same mindset when it comes to selling food and vegetables and produce. So I think with grocery outlet, this is definitely a huge market re-rate, and I think we're gonna be seeing some very good moves to the upside if what I've just told you guys about the overall economy actually occurs. Okay, and if that actually occurs, I think grocery outlet can definitely be back at least minimum by the end of this year above $10. Okay, that's being very conservative, by the way, right? Because again, we could be seeing a lower low again. I mean, why couldn't we? Right? Why couldn't we be seeing a lower low, right? And then again, if that happens, that's great. I can buy my last 500 shares and bring my position to a solid 1,000 shares, right, on this company. Okay, and obviously, there's obviously leaps available too, which I've outlined in the CFS Ring Watch. Not in the report, but in the Discord. Yeah, in the Discord, right? So, yeah, it's in the Discord. I think I've outlined the specific leaps contract that I want to look at. Yeah. So, I can share this with you guys too. So, I said, the contracts here. Yeah, so the $7.05 strike call contract for the expiration date of January 15th, 2027. That's an option. Or you can get the $10 strike call contract that expires on January 21st, 2028. Again, those are two very specific expiration dates that I want you guys to remember, right? And it also aligns with the overall macro perspective that I've just explained to you guys a couple minutes ago, right? So again, this is very, very important information that hopefully you guys are writing down, or at least remembering in your head and storing it for later. But then again, I think this ticker alone can become a very good position to have for the rest of this year, into next year, maybe even possibly again to 2028. Who knows? Right, depending on how the overall economy performs and how the labor market and inflation continues to move. Right? So yeah, that's pretty much it for the technical perspective there for GO. I mean, I think this one definitely deserves to go back to being at least, a mid-cap company. I mean, it's too bad that it's dropped below the 1 billion mark for capitalization, for market capitalization here, or market cap. But again, I think grocery outlet is definitely a good position to hold for the rest of this year. And now let's take a look at the fundamentals, right? So fundamentals aren't looking too hot. However, just like I've explained earlier, the potential for this company trying to maybe turn around its business, well, the numbers could be pointing in that direction. A little shrug here for me, but it could potentially be heading towards that direction. So the profit margins here aren't that great. First of all, it almost looks cyclical. It seems like there's a cycle here for the profit margins. It's not that great, 29%, almost 30% there. But what I like to see is that the free cash flow has been pretty positive, right? I mean, yes, there have been negative quarters, but there has been some consistency with the positive quarters here for free cash flow, right? And the overall fact that they've also had a stock buyback program in 2024 is pretty interesting to see, even though I think they could have kind of spent that money elsewhere, because again, that didn't do too much. As you guys can clearly see here, it did not affect the market cap. It did not bring more value for shareholders, unfortunately. So I think with the addition again of the new board members, or the new directors to the board, right, as you guys see here, I think it's hinting, or the company is hinting at us here that, hey, they might just start to focus more on the company itself, which is very, very good. And the fact that maybe this little pop that we've just seen in the short-term investments and cash section, or the fundamental metric here that we like to take a look at, the fact that it has had a nice little pop from 52 million to 69 million could be telling us that they're kind of focusing more on the quote-unquote correct stuff like their overall balance sheet, right? Because their balance sheet is horrible. Right? Take a look at this, right? Take a look at just the overall numbers here from the cash slash short-term investments to their total debt. Right? So the total debt is sitting at nearly 2 billion. That's not good. That is not good. And I can bet you guys that their long-term and short-term assets do not cover their total debt. Okay? Which is fine. Again, that's fine, because again, this company may just be on the cusp of providing a new potential plan to turn this company around, and that's exactly, I think, a great turnaround back to what I said earlier about how Stanley Druckenmiller invests. Right? He likes to take a look at things on a very surface level for a company, and he gets into a position, right? Possibly a starter position, and then once he has made that position, right? Once he has that position, he will do a deeper analysis, and that's kind of what we're doing here, right? Again, I'm not going to be adding 500 more shares onto my position to bring it up to that final 1,000 share position that I want to have eventually for this company until I see more bullish indications coming out of this company, not just based off of the technicals alone, but based on their numbers here, their fundamental metrics, right, that we tend to look at here. And I think we can see that once we are able to see their next numbers that should be coming out for the next quarterly earnings report, which should be held around May 12th. Okay, so that's not that far away. Does this make sense, guys? Please let me know in the chat room here if that makes sense. Okay. I see you guys' reactions there, and oh, do nothing. Yes, sir. What? Yes, sir, risky. No. Yes. Yeah. Yeah. Is that what you said right there? Yes, sir. Yeah. Okay. Okay. So, again, I think this is definitely a ticker that you guys should be looking out for. Again, we already have a long-term position. My own personal entry point is around $6.98, right? $6.98. I give you guys a full breakdown as to the reasoning behind my personal investment into GO, and I give you guys kind of the macro perspectives on the overall economy and why the consumer staples sector will be very, very, very important in the next coming years, right? At least the next year, the next immediate year. And again, I gave you guys the reasons why I think consumer staples was very strong today, albeit, you know, the market was very strong and the market breadth was very, very strong. All right, again, I don't think that was the major reason. I think there is an underlying reason why XLP had an amazing day today and was able to recover all the losses it made yesterday. Okay, and again, XLP alone, I mean, fantastic job at defending the daily 200 SMA here, right, at $81. And then again today, very nice print of a massive bullish engulfing candlestick here, right? So as long as it's able to break over $83 here, I think there's a nice chance that we revisit the highs here in months time. Okay. All right. So again, to everyone that's just joining us now, I can't stress this enough, right? I think tonight's stream is a very, very important stream that you guys should watch from literally the beginning to the end, because you guys have to lock in for if you guys are potentially watching the stream from the beginning to the end on the replay, right? Once I'm done with the stream, you guys have to lock in, because I give you guys so much information that is very, very important. So if you guys are just joining us now, please watch the replay. Like, I'm begging you guys. I'm literally, I have my hands put together like this. I know you guys can't see me, but I just clap my hands, right? Please watch the replay. I've stated such good information that I think you guys should hear and watch, right? What I'm showing you guys on the overall markets and obviously on XLP and ticker symbol GO. So please, if you guys just join, make sure you guys click that like button down below first, but please watch the replay. All right. Okay, and so that's pretty much it for tonight, guys. I know I started this stream an hour earlier, but we've already been, we've been live for 45 minutes. Wow. So I really think that, again, you guys should watch the replay, watch the beginning all the way up into the end of this video once the replay is uploaded automatically. And again, that will be uploaded once I am done with the stream by default. And if you guys really want that potential, very well, I will be trying. I will be trying to be as humble as possible. But if you guys really want to read the most likely accurate analysis on the overall and upcoming state of the economy into the end of this year and into next year, make sure you guys become a reader of the CFO Stream and Watch report. Again, if any of my readers are currently watching the stream now, just let everyone know in the chat room, right? What you guys think about the report, right? I really think that you guys will definitely guarantee learn something from the report, even if you guys are with us just for a month, right? You guys can just try us out for a month, and you guys will definitely learn something. I can 1000% guarantee that, right? And if you guys are still kind of on the fence about joining the report, right? If you guys are kind of on the fence about becoming a reader, right? I really think that you guys will benefit just based off of the macro analysis that I do, the top-down market analysis that I do every single week, because it will help you guys kind of have a different perspective on the overall economy based on what you guys have, right? Maybe you guys have a different perspective, but maybe I can give you guys a potentially a better perspective based on my experience, based on my overall background with facing and reading the data that comes out from the economy every single week, every single day, every single month, right? So I really think that you guys should at least give it a try. Again, I'm not trying to toot my own horn here, but I really think that this report can very well be a good guide that you guys can really rely on, right? I really think that you guys can definitely have great benefits from just reading this report alone on a weekly basis. Okay, so I think, again, if you guys have any questions, please ask me. If you guys have any questions regarding the CFO Stream and Watch report, I think it's essential that you guys ask me questions, because I would love to answer your questions regarding the report. But guys, please, if you guys have the chance, if you guys are able to, just at least try us out for one single month, right? Even if you guys aren't really willing to, right? Just try us out. Just try us out for a month. I can guarantee you guys there will be no harm in trying us out, because I can guarantee you guys 1000% that you will learn something in that single month alone. Okay, and Joel, thank you so much. It's an amazing report every time. Join, very accurate information. Yes, I agree with that. I wholeheartedly agree with every single one of those points that you've just written there in the chat room. All right. Okay, well, I mean, that's pretty much it for me, guys. I really think that, again, you guys should come back to the replay of the stream and just watch the stream from the beginning to the end, and just focus on what I have to say about the overall do nothing you said. I can agree there. Thank you very much. Okay, so I really think that you guys should watch this stream over and over again if you guys really want to remember what I've told you guys tonight. But again, just focus on the consumer staple sector that I told you guys to focus on, and the reason why as well. And obviously the singular ticker here that is in the consumer staple sector, GO, Grocery Outlet Holdings Corporation. All right. Okay, have a great rest of your night, and I'll see you guys maybe on Friday as well. Maybe I'll do a stream on Friday at the same time, or back on the regular time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Okay, let me just type this out here for everyone to see. Okay, alright, so have a great rest of your night, and hopefully my doom and gloom video here, which is very not like me, but hopefully this very weird and odd doom and gloom video was very insightful, and most importantly, hopefully it becomes very, very applicable in the future. Alright? Okay, I'll see you guys on Friday. Have a great rest of your night, and good luck tomorrow.